Have you ever wondered what quarterly estimated tax payments are all about? Welcome to Tax Term Tuesday. I'm John Thompson, an enrolled agent and owner of JCT Tax Solutions. Today we're talking about quarterly estimated payments, something that affects millions of Americans, but many don't fully understand it until they're hit with a penalty. Quarterly estimated tax payments are exactly what they sound like, tax payments made 4 times a year based on your estimated income. Unlike employees who have taxes withheld from each paycheck, certain taxpayers need to make these payments directly to the IRS throughout the year. You're generally required to make these payments if you expect to owe $1,000 or more in taxes when you file your return, and your withholding and credits will cover less than 90% of your current year tax or 100% of your previous year's tax. This typically includes self-employed individuals and independent contractors, business owners, investors with significant investment income, retirees with income that isn't subject to withholding, and anyone with substantial income not subject to withholding. Now here's something crucial, the safe harbor rules. To avoid underpayment penalties, you need to pay the lesser of 90% of your current year tax liability or 100% of your previous year's tax, although this jumps to 110% if your adjusted gross income was over $150,000. Since calculating the current year tax liability is difficult during the year, your safest bet is to cover the 100% or 110% of the prior year tax safe harbor. A big misconception is thinking you can just pay everything on April 15th. The IRS expects these payments quarterly because our tax system is pay-as-you-go. Another mistake is ignoring a big change in income. If you have a much better year than expected, those safe harbors might not protect you if you don't adjust your payments. So here's some practical takeaways. Mark those due dates on your calendar: April 15th, June 15th, September 15th, and January 15th of the following year. Second, consider using IRS's direct pay system or setting up EFTPS for electronic payments. Finally, talk to a tax professional if you have a complex situation or significant changes in income. And if you're not sure if you should be making estimated payments or how much to pay, it's worth getting professional advice. I'm John Thompson with JCT Tax Solutions, helping you navigate tax season with confidence. Subscribe for more Tax Term Tuesdays and drop a comment with any tax terms you'd like me to cover next.